What's up, traders? Anthony Crudele here, and welcome to 10-Minute Technicals. Today, we're going to focus on this rotation we're seeing off of all-time highs in the major indexes. I'm going to talk about key levels for resistance and support, where I think the E-mini S&P, E-mini Nasdaq are headed. And we're also going to talk about the Russell 2000 and ZN, which is the 10-year futures, because that's playing a major role in why I think that we're rolling over a little bit here. Now, I'm going to be talking about futures markets today. If you're on TradingView and you're interested in trading futures right on TradingView, go to tradestation.com/Anthony. You'll get 50% off your brokerage fees, and you can connect your TradeStation account right there to TradingView. Now, I'm going to start off with the big dog today, the E-mini S&P, before I get into NASDAQ, Russell, and ZN. And I want to talk about where I left off with 10-minute technicals. If you go back to the end of April, beginning of May, I talked about why I believe that the market could be headed back to all-time highs. And I highlighted a couple circles here, going back to that video if you wanted to go back and watch that, because it's really the same scenario we saw happening then for a rotation back up that we're seeing now for a rotation back down. Couple differences, which I'll get into detail as to what they are. But the premise of it is there's a couple things that are very similar, and I'm going to start off there. First thing is, I talk about Bollinger Bands all the time, 20-period, 3 standard deviation. And anytime Bollinger Bands are opening up like a mouth, okay, that indicates range expansion. That is a specific market environment. Ranges are getting bigger, and we're expanding in a certain direction as well. So it's not only ranges are getting bigger, but we're trending in a direction. If you go back to April, we had range expansion with the mouth of the Bollinger Bands opening higher to the top and the bottom lower, crossing below also the year-to-date anchored VWAP, which is another indicator I'll have in here, which is the orange line that you're seeing across the charts. And what happens is that once that Bollinger Bands start to come back inward, what happens is my beacon indicator, which is free and open source on TradingView, it draws lines. 30% is blue, 50% is yellow, 70% is red. And it's just a percentage, basically a fib, off of these Bollinger Band peaks, okay? So if I just take a Fibonacci retracement tool and I just show you what that looks like, you can go back and look and see they're going to be highlighted right up on there, 30, 50, and 70%, okay? And those are just my support and resistance levels. And what I look for is if you go back in why I called for all-time highs in this moment to happen, which, fortunately did, and I've only been playing the long side. As you can see in my free daily note, I put in my Discord and I put it on X every day. It's free. You can go and read it. Is because of exactly what happened here, the rotation higher, above the 5-day moving average, above the anchored VWAP. You had Bollinger Bands coming inward, sucking volatility out of the market, contraction, grind higher. I mean, that's what bulls love, right? Now we get up to this point where we recently were just a few days ago. We talked about this high. I said, I don't think it's a great high. I still don't. I think that high probably gets taken out at some point, but you never know. I'm not in the business of trying to pick tops or bottoms. I'm just trying to look for a high that's we can trade off of. And I think now after today's action, I feel better about being able to trade off of it. And not that I'm necessarily going to lean entirely on it, but I think it's a good enough high to where we're going to rotate lower. And here's my reasons. Look at the Bollinger Band up top. I have it circled. Bollinger Band started to come back inward now. Up until today, the Bollinger Band had been pointing outward. So today we had a lower close. We had some selling pressure come in, and we closed below the 5-day moving average for multiple times now, which is also key back here when I called for a move higher. Bollinger Bands are now coming inward. Those two key things are happening. Also going back to what happened when this low was made, and it's similar to this high. What's similar is the RSI got oversold just barely, about a 30 on oversold, right? It wasn't like so oversold that the market should just scream higher. It wasn't really a capitulation type move, but it eventually did come out from being oversold, and it did really close to getting overbought right around 70. So you look at 30 and 70 in RSI, and that's oversold or overbought. But to me, it's not, look at, we got overbought roughly up on this bar. What was that, almost 2 weeks ago? And we somewhat stayed overbought or near overbought for a couple of days. I don't think that the market is so overbought here which is why I don't love the high. I don't think it's a great high. You like to see really overbought conditions, really oversold conditions, high volume, capitulation type moves off of highs or lows. And I guess you could make a case that this high has some of that characteristic, but overall, I don't love it, right? And so I think for now it's a good high, but I don't think it's a good high for the year. But we'll see. Now the Bollinger Bands are starting to come back inward, which is going back to what I talked about. We have this compression now, right? So we're out of range expansion. We're now in what I consider mean reversion. And so if we're in mean reversion, we're going to revert back. And the target that I have right now is 5201. And 5201 is my neutral zone. That's the 50% line between the bottom Bollinger Band peak and the top Bollinger Band peak. I'll pull my fib out again just to show you, right? Here you go, 50%. There you go. It's going to line up right on it. Comes in at 5201. All right. Now, I think it's headed there most likely within the coming week or so is when it really should happen. If it's going to really be a real rotation here, should see it happen within a week. The more time it spends sitting up here, the less I like being short. But for now, I think you can play the short side looking for 5201. I think that's an area that the market looks to test and probably try and hold. The problem with 5201 for major support is that there's no confirmation here. You have 5115, 5114 area way down below, which is the year-to-date anchored VWAP. And, to me, that's an area that it could get sucked back into. I don't think that happens within the next couple of weeks, but anything is possible. Let's take it one step at a time. 5201 is the first area. And when we get down there, if we get down there, I'll look for longs. And where I'm wrong in this is I'm not going to lean on that high. I'm not going to have some big swing position on. Use the 5-day moving average as a guide. 5-day simple moving average. Some people use a 10. I like a 5 or a 10. It just keeps it really clean for me. I'm not going to use it for anything more than just say, can we continue to have the average weekly, which is 5 days, price below that moving average? Are we closing below that 5-day moving average? If we continue to do that, it tells me intraday the pressure's on the longs, and you probably want to look to sell rallies intraday as a day trader. So that comes in at 53.14 right now. Now 53.20 ish is my red resistance, which is at 70%. A daily close basically above, let's call it 53.20, would then put, or 53.28 it says on here, a close above that would then tell me don't look to be short anymore. We're probably going to continue to push higher, or maybe we go back up to what I think could be up as high as 55.18. But once again, one level at a time. For now, I'm bearish below 53.14 to 53.28 until we see daily closes above there. Look to sell rallies, but really small, because I just don't see a lot of reasons here to be super bearish. And the reason is because look at NASDAQ. NASDAQ is showing something very similar. 18,173 would be my target for NASDAQ. So that's the key level to watch. Resistance comes in at 18,829. And the 5-day moving average is still sloping higher. It's still trending higher. You've got NVIDIA and all these other stocks so strong. Unless the NASDAQ starts to roll over and gets daily closes and takes out some of these recent lows, the S&P is going to be a bumpy ride lower, which is why I'm not super in love with being aggressive short. But that doesn't mean I won't be short. It just means I won't be aggressive, small and smart. Below 18,830 gives me confidence ES is headed lower. As long as NASDAQ stays below there, I think it's good confirmation. 18,173 to 18,000, big support area in NASDAQ. I look for swing longs there. RTY, just a two-way tape, man. I mean, this market has not been overbought or oversold the whole year. If you look at it, it's really just doing nothing. The RTY is a market. If you're a trader that likes a sloppy, choppy day, a two-way tape for your strategy, RTY is your market right now. And you have Russell reconstitution coming up soon. And to me, that is going to be a time where you're going to have some volatility. So if you're a two-way trader, RTY is a good market to look at. And the reason why the RTY, I think, stays sloppy and probably bearish is because of ZN. And ZN is the 10-year futures. And when you look at that, to right now, this is the key to why we're going lower in equities. Bond market cannot hold a rally. That means rates are going higher. ZN keeps going lower. Hard to want to be bullish stocks with a ZN that continues to push lower. Keep this up on your chart. I don't really have any key levels to look at here for ZN. 107.25.5 is right where they are. It's right on my support. If it pushes through here, you could see new lows made. Look at the 10Y1 is also something to look at. 4.61 is where the 10-year micro 10-year futures are right now. If it starts to get above this recent high of 4.71, 4.72, you can have real pressure coming in S&P and RTY. Maybe not necessarily in Nasdaq, but it's something you have to keep an eye on. That does it for this week's 10-minute technicals, traders. If you enjoyed this show, please give me the thumbs up on YouTube, and of course, subscribe to my channel. And if you're following me on socials, X, I'm at Anthony Crudele, also anthonycrudele.com, where you can get my free newsletter, get on my email list. I put it out every morning. It's also going to be in my Discord. Also, you can find that on anthonycrudele.com.